Hello and welcome to another great segment brought to you by Atlanta Business Accountants. This is Greg Freyman from Freyman CPA. And today I'm going to discuss with you, is your tax refund at stake this year? This is a really great question because it should be on some people's minds for sure when they're getting their taxes ready to be filed each year. So let's just discuss really quickly, first of all, where can you find out about your refund? So here you are, you're filing your tax return, you're sending in your tax forms. Your accountant usually will provide you with a quick summary as to what you owe or if you're getting a refund. And if you're getting a refund, where to check for your refund. So the tax authorities, the IRS, the states, the city, they all have like a website that you can log into and track your refund. With the IRS, it's pretty straightforward. It's called Where's My Refund? And you can go in there and check on that status. So let's say you're expecting your refund to come in, but it's not coming in and it's taking an awfully long time. What can actually slow down this refund? So a few things can slow down the refund. In other words, you're still going to get your refund, but it's not necessarily coming very quickly. So obviously the time you file will determine how fast your refund is going to come in. So sometimes when you're filing very early in the season, you're going to get your refund much sooner than later. So that just gives you, just a little bit of incentive to come in and file your taxes on time. I know that's something that everybody tries to avoid, but try to be ahead of the pack and you will be rewarded for your efforts. Now, as far as other issues that can slow down your refund, just to name a few, would obviously be an amended return. If you're amending a return, that's going to slow down the process and somebody might be looking at your return. Also, special situations. If you have like a special form that isn't e-file accepted or is a more complicated filing, somebody's going to be looking at that when it's filed, so that can also slow down your refund tremendously. And obviously, the situation here that I'm going to talk a little bit more in depth about is if you owe money to the tax authority or if you owe money for a past due debt of some kind, that will obviously slow down your refund. So let's see. So if you owe money to, let's say, the tax authority for a prior year and you file and you're getting a refund, they're just going to deduct it. If you owe money for credit cards, maybe some other, besides back taxes, some other loan or something, or even the state tax authority, they can communicate and they can pull your refund directly for a state issue. So you might be expecting a refund from the IRS, but if you owe money to the state, they'll just pull that. So just keep it in mind when you're filing your taxes. Don't always anticipate that you're going to get a refund. So what can you do about it? If you do owe money for a back tax, or not necessarily you, maybe your spouse, it can be, so in other words, if you do owe something, they're going to pull it from you. But let's say you're in a situation where you don't owe anything, but your spouse does, and you might be entitled to a refund. So what are some of the options that you can take? So married filing separately comes to mind. Obviously, if you've seen our videos on married filing separately, I'm going to post a link down below in the description so you can check out that great video. Now, the tax law basically discourages filing as married separately for some reason, and they just want everybody to file jointly. And so, in other words, when I say discourage, they slash credits in half. They disallow certain credits altogether. So in other words, the tax law does not really favor that sort of filing status, and the rates tend to change. It used to be what we call a marriage penalty. So when you get married, since you're combining income, it would throw you into a higher bracket and you'd end up owing more taxes than if you were filing separately. So they kind of mitigated that a bit as of the reform, and they tried to basically make it more of an equal playing field by abolishing these higher rates that you would get as a married couple and almost equalized married filing separately except for higher income taxpayers where it's still sort of being penalized. But nevertheless, the tax law still discourages married filing separately. So I almost never see a married filing separately return end up being a better outcome for the clients as compared to married filing jointly. And our software runs a comparison of married jointly to married separately with each return that we prepare. It generates it, and we look at it and we investigate to make sure that it's being properly tagged and classified to make sure that our analysis is correct. And like I said, it's very rare for married filing separately to be a better outcome than married jointly. So what do? So here you are, you're a great taxpayer, you've always filed everything on time and you're always getting a refund, and now you got married and your husband or wife or whatever significant other owes some money for either back taxes or some sort of loan, and you know full well ahead of time that your refund is going to be compromised when you file jointly, and filing separately is just going to cost you more. You've ran the numbers and you figured out that it doesn't work for you. And like I said, about 99% of the cases are not going to benefit from married filing separately for, the total tax liability and tax outcome for the entire family. So what you can do is you can do a protective filing and do a special form, which is called injured spouse. Okay, so injured spouse is a special form that's designed to basically allow for you to separate out what you would receive as a single individual compared to your spouse, and request for a refund that's completely different than what it would be if it were a joint return. So it's actually going to have two columns that separate what your income and deductions are and what your spouse's income and deductions are and what refund you're entitled to. So it's a protective filing. It's called injured spouse. It's a special form that your accountant or you can prepare. And just keep in mind that there is, community property states where the laws are a little bit different than non-community property states. So you might end up needing some assistance depending on which state you live in. And those forms might need to be prepared a little bit differently because you're actually splitting things 50-50 as opposed to allocating them to one spouse or the other. All right, so that's where it can get a little bit tricky, and you might need to have a professional involved to make sure that you're completing the forms properly and that you're going to get your refund on time. Let me take that back. Excuse me. On time might not actually happen with an injured spouse. That would be another case of slowing down your refund, even though you're entitled to it. And that would actually greatly slow down your refund because it's a special form. It's a special situation. All right. That's pretty much it on can my tax refund be compromised when filing for my taxes each year? And just let us know if you guys like the content, if you have any suggestions on what we can bring to you guys, if there's something of interest, if you'd like to see us present on any one particular topic, we'd love to hear your feedback. And again, just always wishing you a great day. Remember, our motto here at Freyman CPA is your success is our success, all day, every day. Thank you for watching and tuning in, and we'll see you next time here on this channel. Talk to you later.